Hi, today we're going to be looking at the effect on the Banking Amendment Bill 2015 on banks, and specifically how does that affect the way banks run and what happens to them given the new interest rate capping law. This is MoneyWise with Rina Hicks, where we create, grow and preserve wealth. So again, I'll refer to the composition of interest rates. We looked at the cost of money as being one of them, administration costs being another, non-performing loans being another, and lastly, the profit that a bank really needs to make because they're in business and they need to continue to be in business. So the margins that you see, and people have been saying, oh, I'm making such a huge margin, no, the banks are making such a huge margin, is not actually accurate because there's costs that they have to incur to be able to issue those loans. Now, with an interest rate capping, it means that something has to give. Either the banks have to reduce the cost of funds, which means then the amount of money that is costing them to be able to acquire deposits or acquire money from other lenders will need to come down. So for example, today I think I heard somebody say that the bank sent them a message saying that if you have a savings account, that doesn't qualify for the 7.35% interest rate. In fact, it's only fixed deposit accounts that will enable you to acquire that interest that is talking about. So they might rename savings accounts from being savings accounts to something else, so that then they're able to not have pay such a huge interest to their depositors. Or they could go into their admin costs and see how do we reduce admin fees. We might see a lot of layoffs in banks as they try and become a lot more efficient, use technology to be able to deliver their services. But one thing I know for sure is going to happen is that we will see a lot of innovation coming into the market, which is a good thing for all of us. The other thing that could possibly happen is that they may reduce the amount of the kind of profile of customer that they deal with, in terms of they may be perhaps before they were a bank that dealt with everybody from the mamamboga to the person who's a CEO of the biggest company in Kenya. They might perhaps reduce that so that then they only cater to those who will be able to repay, and they are sure they're able to repay, and they'll be a bit more mean with being able to lend to everybody. So those are some of the changes that will happen. What we've seen in the stock market is that there's been a hammering on the pricing of banking stock, particularly those banks that service a lot of middle income to lower income customers. Why? Because it's clear with an interest rate capping, it's not going to be possible for them to lend profitably and continue lending profitably to this clientele. So what does that do? It then reduces the revenue that the banks will earn, or is likely to reduce for a limited period of time, is likely to reduce the amount of money that these banks will make from this clientele. So they will find other ways to make money. I believe they're great, innovative people within the banking sector in this country, and they will eventually innovate. I think the effects will be short-term in nature, but in the medium to long term, the banks will find other ways to be able to make their margins and make either fees or interest income that will come from other sources. So I wish the banks all the best. It's not an easy place to be right now as a banker. We also might see a lot of consolidation take place in the banking sector. All the same, I'd suggest that we continue to be vigilant as investors and as people in the country who are looking to invest your money, and just keep tabs with what's happening, so that then we know how to then act with our finances. And yes, I have released a book, so please click on that video, and I was at this side, I'm not too sure. And you'll get to know more details on when we're going to release it. So God bless you, and I wish you all the best. This is MoneyWise with Rina Hicks, where we create, grow and preserve wealth.